A Balasubramanian of ABSL AMC joins us on the show right now, and Jai Bala on the technicals as well. A Bala, I wanted to begin by asking you, 25,400, we keep on talking about how this is only a liquidity-driven rally. Perhaps valuations are very expensive, fundamentals aren't that strong. But what do you make of it? Do you think we can just continue to make, fresh highs and the valuation is not a concern at all?
Interesting, of course, the market is reflecting some element of buoyancy that continues as far as the economic growth concerns. And while that's been the case so far, we must also accept the fact that the last 1.5 months, markets have gone through some bit of consolidation phase. I think the current movement in the market could also be linked to, in some sense, the rate cut expectation that is beginning, which is in the US. And there has been debate about whether 25 to 50 basis points. If that happens, then we'll go to the rate down cycle, contrary to what you have seen in the past rate hiking cycles. And second is, as a result of that, I think some bit of expectation will get set from Indian interest rate as well. But though in our view, we will not see a rate cut coming in India for at least the next 2 quarters, but at least some bit of expectation will get set. And therefore, some element of renewed interest probably I would say is directly linked to the sentiment improvement that we are seeing in the global market. As far as India concerns, I think we have been going through the consolidation phase. I think the quarterly numbers for most of the companies for the first quarter has been pretty decent. And continue to see the momentum when it comes to the question of both government spending as well as the private capex improving. And GST collection is a true reflection of how the economy is doing. For which I always felt because of high valuation, market will go through a time value correction. But I think on and off it comes in. But today's moment in some sense can be attributed to what we are seeing in the global market.
Oh yeah, absolutely. Jai Bala, hi, afternoon. Would you agree with that? Seems like a global rising tide kind of phenomena and we are catching up.
Hi, good to be here after a long time. See, the markets are bullish, but my take is that it's going to get very volatile from here on because, in my opinion, this is part of the very long-term topping process. So what we're going to see is upsides that's something like 5 to 7% from here. And then once that's done, we're going to see a decline of about 18 to 30% depending on which sector you're looking at. And then once that's done, we're going to see one more move towards all-time highs. So that's the kind of trajectory I have for something like a 6 to 18 months time frame. So be ready to take your profits when you see from here on wear a trader's hat, not an investor's hat. And on your core portfolio, which is an investment portfolio, you might want to start booking profits once we see these record highs towards something like 25,600 to 26,000.
Bala, what we're seeing sectorally, and I want you, to come in here, is a little bit of a rotation happening. Money moving out of industrials, the entire capex theme, and getting into IT, pharma, FMCG. Do you see that the rally could now broaden and more sectors could participate? Or do you see significant outperformance from IT, FMCG, pharma, and maybe banks also play catch up?
Yeah, I think interesting trend if you see that clearly we have seen that in the last 3-4 years of cycles from a private sector banks to the public sector banks shift we saw it happening. Then we saw public sector re-rating of public sector, we saw it happening. And as it stands today, if you see from the global numbers, oil price coming to about $70. Definitely all the industry for which raw material is coming from oil related, they will be the large beneficiary of that. That's something we are saying. I think pharma as a sector again have gone through almost 3.5 years of consolidation period. And now having seen consolidation, now having seen build a good balance sheet, now having seen now price stability coming in, now the sector is coming back. And same thing if it goes for the telecom industries and the rural consumption coming back. We are also saying that the FMCG company is coming back. I think some bit of sector rotation is there. And as a result of this sector rotation, wherever the undervaluation was there, that is now getting corrected. At the same time, wherever the overvaluation was there, that is getting corrected in the form of a time value correction. And definitely that's something I'm seeing it happening. That's one of the reasons why market also is holding on to the broad range with buoyancy continues to remain. So as we put it, like auto, in the OEM side, we are seeing a bit of a dip in terms of sales numbers, but auto ancillaries continue to do well because they are the large beneficiary of the huge amount of sales that has happened in the last few years. And that's something we are seeing it happening. I think that will remain even as we speak.
Sure, so buoyant it is, and clearly the market and the sector churn is at play. But Jai Bala, the kind of sector churn that we're talking about, what within charts would you say is ripe for a bit of a re-rating from your as well? Is it going to be the banking index, because that was one of the big underperformers?
That's right. See, watch the 51,960 on the Nifty banking index. Once that's taken out, it's probably getting ready for fresh all-time highs. But until that point, you want to retain your patience. But from this point onwards, sectorally, you might want to know which sector you want to avoid. From that point, I would say definitely Nifty Realty is an avoid. Also, Nifty Metals is an avoid. So you can be bullish with the rest of the markets. But these are the two sectors you need to avoid. And I've been bullish on Nifty Pharma and Nifty FMCG. But everything is getting quite stretched. And they're all getting to a probably an exhaustion point. So be very selective and know where to not fish. That's more important than where to fish.
Don't fish and perhaps just stay with quality. So, for instance, realty and metals are two spaces where Jai is recommending that one should look at booking profits. But Bala, if I had to ask you about the sectors that one should avoid at this point of time, are there any names that come to mind?
Not. I think we'll probably see the oil-related sectors could potentially see some kind of re-rating. As I mentioned, that input cost is coming down. That one, even the OMC sector itself could be the large beneficiary. And given the fact the crude oil price coming down and the prices remaining stable when it comes to the question of from the consumer point of view. And the FMCG, which you have mentioned about with the rural spending gradually seeing a rise, even the FM sector should also see some kind of re-rating. So that's what we are saying. And this is again coming from the fact that I think they've also been underperformed in the past. Therefore, some element of pullback is also obvious in this sector because the macro also becoming favorable for the sector.
Right. Bala, the other thing I also wanted to talk about is where is it that you are seeing maximum inflows? Is it largely in flexi-cap schemes or is it still small and mid-caps which are finding favor?
I think clearly we are seeing flows coming into the large cap, flexi cap. We are seeing increased traction coming in this segment, and as well as a multi cap at this point of time. Those small and mid cap continues to see flows. Definitely the rate of flows compared to what you have seen in the peak versus now, there is a bit of a reduction. Also, given the fact that equity market was going through a sideways for some time, there has been a renewed interest coming into the hybrid funds as well. Where the hybrid funds we saw some element of slowdown we have seen, but once again I'm seeing it coming back.
Jai Bala, thanks so much for joining us today and making time on this momentous occasion of this fresh record high.
If you like this video, then like, share and subscribe to ET Now.